Hello, everyone, and welcome to the Hub Live Q&A Friday afternoon. Great time to be here, and I'm glad to be back. I haven't been here for a while. It's great to have Rob Roy back here. How are you, Rob?
Great, Scott. Good to see you again as well. Mehdi did a great job in your absence, but glad to have you back.
I'll pass on pass that information on to him. He'll love that. He loves a little bit of a boost.
Yeah, no, you did well, honestly.
So it's been a busy market this week. Obviously, a lot of data coming out and so forth. What do you want to jump into first?
Well, let's take a look at. I think let's take a look at the Qs. We can see the chart on the screen here. We're in a wave three, and I know a lot of people are caught off guard by this move to the upside, and comments on YouTube, et cetera, have been you're crazy for being, just everybody seems to be bearish, or a lot of people seem to be bearish. But we talked about what would happen if interest rates came back down, and they did. But right now, short term, we have this zigzag pattern on the Qs, and with a 38% B wave correction, you would expect a 61.8% extension, and that's basically where we are. So my point is, this has been a nice run, but a couple of things are troubling to me with where we are right now. One, we're hitting a pretty major fib resistance level at 61.8, and those of you that have been watching us week in and week out know it. I don't like it when things go like this. When it goes vertical, that's troubling to me. So we've got a bit of a vertical move here, bumping up against a fib resistance level. I think at the very least, we may pause here. Who knows how we finish. Last week when we did this, we were rallying and sold off into the close. Maybe we get that again today. But of course, we rebounded this week. And as you can see from the 10-day moving average, we're a little bit overbought as well on the Q. So there's been a resurgence in NVDA and the Super 7 stocks. And that's because interest rates have come back down. And we talked about this for so many weeks, Scott, with this level here between 34 and 40, that if this is the area that you want to watch, or this is the area you want to watch, and if we could stay in here, that's kind of the sweet spot for the tech stocks. And we broke out. Oh, pardon me.
Sure.
Yeah, it's coming.
Let's do again.
Again. Goodness. That's been coming since we started, so hopefully that's out of the way. Problem is that usually when I start sneezing, it doesn't stop. So we'll see how things go here. But the key is that we had broken out of this 40 level, but no follow through. And so now we're back in that sweet spot range again. And so this bring back down in rates, better than expected inflation data has given another leg up, at least on the Qs for now. And then if we take a look at the SPY, pretty much the exact same thing. So I don't need to go through this again, but we're marching towards that 460 level, which is where LA Wave has been saying we were headed for a while now. Now it's moved up a bit because of this move higher, but 460 was that original target. So been a bullish week.
Yeah, that was why I'm not sure if you saw the headline with Goldman saying the S&P could finish the year at an all-time high, and I've seen a few other analysts saying that as well.
When is that the bandwagon thing going on here? Because everybody was the opposite before. All-time highs. I perhaps. I think what my opinion only, which whatever that's worth, probably not much, is the fact that the inflation data had, the Fed was so hawkish in their last meeting. They're raising at least 2 more times, and the Fed Fund Futures rate cut forecast was gone for this year. So perhaps there's a thought maybe they'll go back to 1 and done and not do the second one. And then we can start looking towards that rate cut scenario again. That's what drove the last part of the rally when we went up here. And then as the Fed got hawkish, we backed off a little bit. But now, same scenario we were before. I think that is playing into what's going on. But the more people start jumping on this bullish bandwagon, as you know, Scott, the greater chance that we have of some sort of a pullback. So that makes me nervous when there's big headlines of all-time highs, and that's the time to start to get nervous.
Well, we'll keep those questions coming in, everyone. We've actually got quite a few that are loading in through here right now, and one of them actually, Manuel's actually got a couple of questions, but let's look at his first one. Is Meta.
Yeah, but that's been an amazing story. We talked about this one last week as well. And, you know, I was talking about how this is it's almost like the jinx, right? This 45-degree angle move, that's what you want. I mean, that's the kind of move that holds. All stocks go through impulses and corrections. That's just how the market moves. But when you have a 45-degree angle trending move rather than a more vertical move, the corrections tend to be less severe and likely to continue in that trend. But then look what's happened. So we've had this long 45-degree angle move and then boom, vertical. And so that gives you a little bit of pause, I would think. Is this a little FOMO thing here, a little bit of a blow off top maybe? I feel like that could be what's gone on with Meta. I know it's been kind of humorous on the financial networks where a lot of the pundits have been saying that they like Meta now because they're not talking so much about the metaverse. You know, they've been more on their core business model, and that's given a bid to the stock ever since coming off those lows. Gosh, it seems like forever ago now, but it was just November that they were trading below 100, and now we're back at 300. So we've hit this round number of 300. We've had a bit of a gap up. Again, I think it's lending itself to potentially a little bit of a pause here.
Okay. The other one Manuel wants to look at is ARK, and it's interesting because Bloomberg putting an article out about how fans are walking away, how they've been losing funds, but at the same time, yesterday there was over $100 million of inflows into ARK. But how does the chart look for ARK?
Yeah, and this would be a concern on top of the fact that money's flowing in, right? Because when retail money comes in, usually historically the retail people come in last. And it's just amazing to me, Scott, how these vertical moves are just attract people. You know, going all the way back to the meme craze and during COVID, when things go vertical like that, it sucks people in. And so, you know, same thing from the article that you're signing through Bloomberg, is money pouring in here. And, you know, Cathie Wood she was everywhere for a while back when, you know, ARK was up in this range. And so it's been a rough couple years for the ARK ETF. And she's had a bit of resurgence with these tech stocks moving back to the upside. And, you know, I like to see everybody do well. So I'm happy for her because she took a real beating for a while. But, you know, I'm nervous about the fact that it's gone vertical, money's pouring in. That feels like at least a short-term top as well. So I'd be a little cautious here. We're separated from the 10-day moving average. But when you see the headlines, Scott, I mean, you've been at this long enough to know that that's the death knell, right? When everything starts making the media headlines, you're nearer the end than you are the beginning when those things start happening.
Yeah. A question for you. Do you know what Cathie Wood's known as in Korea?
I do not.
She's known as Money Tree.
Is that right?
Yep. And so there's a lot of Korean investors in the ARK fund. I know that. All right, let's look at the next one from Ren. Rivian, please. RIVN.
Yeah, we had done a thing over on the EWO channel where I was saying that I like the car better than the stock, but that's changed, right? So we've had a big run up here, but again, look at that move. Same thing, same scenario here. We got a theme here. It's kind of vertical moves. And that kind of stuff makes me nervous. Now, so far, the consolidation is what you want. So we've had a vertical move, couple of gaps. Don't like any of that. We're still well above the 10-day moving average, but so far, at least, the consolidation has been horizontal, and that's what you would like to see. I do feel like we likely come back down towards that 10-day moving average, possibly even down enough to fill at least this first gap. But here's another one that, yeah, it's had a big move, and a lot of people have been talking about it. There is a possibility at some point that we could see 30, because that's really where the resistance lies. There's really no resistance with where we are right here. It's just, it got a little too vertical, I think. It needed to pause. But where we are, just, you know, you could argue it's the bottom of that area, but maybe we find 30. If we do, then I would really want to be out. But if I had participated in this move to the upside, I'd have really tight stops. Anything below 25, I'd be out. And I don't think it's an opportunity to get in right now. I think we need to see a little bit of give back first. My point is, I think you'll find a better entry at some other point than right now.
Okay. Harry just doesn't have any questions for us this week, but just saying thank you for the live stream. So thank you for watching, Harry.
Yeah, appreciate that.
Ren wants to also look at UNG.
Good old natural gas. That's a good one to look at, and looked like it was making a move. Every time it seems like there's a bid coming into natural gas, it gets sold into. So there's sellers that are still in control here. We get in that neighborhood of 8, and that's where they put the pedal to the metal, if you will, the short. So you can see a little bit of run there in April, not too significant, but we took a shot at it in May, got near 8, banked down. We did it again here towards the end of June, and back down we go. So now the question, because we broke 7, are we going to have to come all the way back down and test 6 again? That's a possibility, because now we're below all the major moving averages. So we just can't seem to get above that 8 level on UNG, and this trading range remains between 6 and 8. And I've looked at this before as far as some sort of a sideways trade, a butterfly, whatever, but the premiums are so small in the options, you can't even create a trade with any sort of a legitimate risk to reward to try to capture the sideways move. It's just hard to trade this. Now, if we can get above 8, I think you'd have some, especially with these 2 moves, heck of short covering, and we could take off. If we break below 6, then I think you could short it. I mean, UNG's been down, 2-3 years ago, so there's a possibility that we go lower from here. But it's just hard. It's not tradable right now, I don't think.
I just had a question come through on my Twitter side as well, asking about oil. I did an interview earlier with a guy called Jay Pulaski. And I think he said in the last 4 quarters, oil's been down the last 4 quarters. I don't think that's happened since the 80s.
Yeah, I haven't had a chance to dig into the consumer confidence number that came out today, which was one of the highest since 2006 or something. And it's like, what? Because the last consumer confidence survey was when people said they weren't going to go on vacation this summer. It was going to be staycations. Well, I can tell you from someone that's done some traveling here over the past month, either they lied or they've changed their mind, because cruise ships are full, airlines are full. I had 2 flights this week, not a single open seat on either of the flights, not one open seat. And I live near Orlando. I moved on this before, but there's a big route between Orlando and Atlanta. I mean, there's flights every hour, multiple airlines that fly Orlando to Atlanta, 2 of the biggest airports in the world. And on Delta, at least, they've had to bring in bigger planes. Usually it's the 737s that, the workhorse plane that goes back and forth. But there's so many people wanting to travel that they're bringing in the 767s, 777s just to fly that hour, John, from Orlando to Atlanta and in reverse. So people are on the move. And we talked about this. This is a long-winded intro here. Sorry about that, guys. With this triangle pattern on whether we were going to break to the upside or the downside. The argument was, if nobody's going to travel, where's the demand for oil? We could break lower. However, if we do continue with the early summer travel trends, then we could break higher. And that's what's happened. People are on the move, and so oil has moved to the upside. So I think we may break that down string that you were talking about there, Scott. But once again, a bit overbought, vertical move. But people are traveling, I can tell you that. And now we're halfway through July. So I don't know who they surveyed in that consumer confidence survey that said they're not going anywhere this summer, but they didn't survey the people that are traveling, because they're out there on the move. And so the last comment on that is that should keep a bid under oil, at least for now.
Okay, a question from Fluffy Lolita wants to look at SLV in relation to the US dollar.
Awesome question, and that's what you want to look at is how the SLV compares to the dollar. And here's the breakout, and we've been watching for this for a while. I'm itching to get into this myself. The issue here is the fact that the same thing I've been talking about. It went vertical, and I hate it when it does that. It gapped up. Sometimes you get more gaps in the SLV than you do in a regular stock, so we don't put as much weight in the gaps on the SLV or GLD for gold due to the nature of how it's constructed. But it's way above the 10-day moving average, and it jumped vertically above resistance. So we wanted it to get above 22 with follow through. Well, we've done that, but it's done it in a vertical nature. See, the last time it broke above here in June, there was no follow through, and we came back down, went all the way down to 21. So I would love to see it bump its head against this 23 level, come back down and test 22. And I think that's an ideal entry. So I'm watching this one really closely. I do think there's a good entry. I just, at resistance and with this vertical move, I can't do it now. It could be wrong. Perhaps it runs right through 23 and keeps going vertically. But let's take a quick look at the dollar because that is the key. You want to keep an eye on the dollar for any of the metals, whether it's SLV or the GLD. And so if we bring up the chart of the dollar, here's the key. And where the rubber meets the road right now. Now notice where we are here. So it looks like we're significantly breaking. My comment had been, if the dollar, which it looked like it might last week, broke below 101, you could see a bid in the metals. And that's exactly what happened. I got this one right, Scott. I don't get everything right, but this one I've nailed. So the dollar breaks below 101, you can see a bid in the metals. It's exactly what's happened. But now the issues, and nothing's ever easy, is it, Scott? I mean, it just, nothing's ever the ideal scenario. We've gone vertically down on the dollar and then vertically up on the metals, and that's the problem. So let's see if we can just maybe calm down both of these moves. Perhaps a test back to the upside on the dollar and a test back lower on SLV. But awesome question. That's exactly how you want to look at the metals against the dollar. And here's gold, which I think is lagging a little bit. So silver is the new big brother. Gold's the little brother, which they used to be the opposite. So we may get an entry into GLD before SLV because it just hasn't been quite as vertical. But yeah, what a great question.
If it was easy, everyone would be doing it, Rob.
Fair point.
Question from iCup here is on AMD. Now, this stock started hot this morning, hit 122, but it's just gone into negative territory on the day. What's the chart looking like?
Yeah, and NVIDIA, which may or may not come up as a question, has done the same thing. Big reversal there, and you can see that we've moved lower here. Just a little too much above the 10-day moving average. Sorry, I'm doing multiple things here, so I'm trying to bring up the quote of NVIDIA at the same time. A computer went to sleep. Well, I put everybody to sleep when I'm talking, it seems. You put my other computer to sleep. But this vertical move here, we had a little bit of resistance at 120. It's had a nice move here to the upside. Closing that gap at 110, I think, was key. I think perhaps we get just a little bit of rest here. This could be actually an entry to continue to move higher. This is a more mature pattern than some of the others, as it's already labeled a wave 4. I think we just got a little overbought early today. This could be some profit taking moving into the weekend, or people looking from a technical standpoint at this resistance at 120. So the key here, I think this is a pretty decent entry if you wanted a shot at something long from a risk to reward standpoint. But yeah, NVIDIA is actually negative now, and it was up big earlier. But I think this is just perhaps some profit taking from a big week run moving into the weekend. Now, if you want to be a little more conservative, I'd always try to get both sides, right? If you're more aggressive, more of a speculative standpoint, think you could take a shot at it now. Your stop would be 110. If it breaks below 110, you're out. If you want to be a little bit more conservative, let it break above 120 with follow through, which it tried to do today. It's not going to follow through that. So a break above 120 with follow through, I think we hit 150. There you go. Both an aggressive and a conservative look at AMD.
Question here from longtime watcher, sometimes host, Mehdi. He's asking about Coinbase. Now, obviously, Bitcoin's been hot, obviously very hot in the news. I haven't been on to talk about that, but you're talking about extended runs so far and so forth. Coinbase, holy jeebus. Remember it was back down at 50?
Oh yeah, yeah, and I did talk about this last week with. I know this is one of Mehdi's favorites, and we actually have the guy that hosts our insiders meeting for our alert subscribers at Evo Trader is a big NVIDIA guy. So it's funny that it's great when you have hosts, like you guys that are traders as well and are in tune with what's going on. So he always asks about NVIDIA, and I know Mehdi always wants to know what's going on with Coin, and I'm sure there's a big smile on his face right now with the fact that they seem to clear up that regulatory stuff. We broke above 80. Now, here's one that I was a little bit wrong on. I did say that if we could break through 80 with follow through, that you would be looking to move to the upside. I did think we would come down and if we didn't have a follow through day to the upside, I thought we would test back down to 80. And, watching for that, we didn't quite make it. So, hopefully, let's see, what was the low there? We got down to 84. So I thought we would come down and test 80 on the break and then take off like this. It didn't quite. People jumped in. All it took was testing the 10-day moving average. And holy cow, I thought then we'd see 100. So I felt like, all right, we test down to 80 and break back up. You're probably going to see 100. And we went higher than that on both of those. So we didn't quite make it down to my entry target, and we blew through my profit target. So as right as I was on the dollar and the metals, just a little bit off on this one, but hopefully people were still able to take advantage of it, and I have no doubt that many did. So the point now, it's overbought, and no way that I could chase this right now. I know that we're seeing a break above 31,000 in Bitcoin. So Bitcoin, Coin, they could be off to the races. I think this is a great place to be going into next quarter, our first quarter next year. I meant to say, but not right now. It's too vertical right now. Let's let it calm down a little bit. And then I think we can catch the run. I do think you'll get a little bit better entry than where we are right now. And we'll see where it closes today and trades early next week. But I think the crypto world is the place to be again.
Yeah, it definitely feels like a little bit of FOMO at the moment in quite a few names, right?
Yeah, and this I'm sure this had a lot of short covering in it because it had all the regulatory issues. Every time it hit 80, it got knocked back down. So that break above 80, I think really. Shorts are usually pretty smart, but it broke above here, so I'm sure they were nervous. And again, I thought it would come back down and test 80. They didn't wait. They covered really quickly. 84 and a half was good enough for them, so they were willing to take that loss and move on. I do think you're right, Scott. I think that the end of the week here, with the week we've had, a little bit of FOMO, and perhaps we've run out of steam a little bit because a lot of charts have kind of reversed here going into the afternoon session here.
Yeah, I've just got another question coming through once again on my Twitter side of it on Tesla. Now, Tesla, there's rumored to be they're hitting the ABS market, which is asset-backed security. It's the first time they're going to do this since 2021. If it's true, it's just a story that's coming through, nothing confirmed. How's the chart looking on Tesla?
Tesla's chart looks pretty strong. We had the blow off gap up here, and then we had this big move when all the other EV makers, it seems like, are going to be using Tesla's charging stations. So that's additional revenue that I don't think was ever factored in to the mix, even though you could argue that from a multiple, Tesla's ridiculously priced as a car company anyway. We do know that their technology as well, and so they really get the benefit of the doubt there on their valuation. So trading right here at 280, gosh, I didn't like this gap. So we came down here and we almost exactly filled the gap with a high 264.45 and the low 265.10. So we've got within 50 cents of actually filling that gap, and now we're back up at 280. And so the key will be, I've said, and I still believe that to get this close to 300, it's hard to imagine that Tesla doesn't see 300, especially now that we've filled that gap. A little more consolidation, and then perhaps a shot at it. We'll see. But 280 is resistance for sure, and it struggled with that. But if it can make it to 300, then I think that would be a point where you'd want to say, all right, maybe that's been a pretty good run.
Another one from Mehdi actually is Disney. Now, CEO had a lot of time on CNBC yesterday. Like, it's all CNBC wanted to talk about. Now, stock's not performing that well today. It's down $1.80. What's the chart telling you?
Yeah, and I'm familiar with what he's talking about, and there was kind of a cute little quote that came out, and I don't want to get into that, so I'm not gonna repeat the quote. But we do know that Disney is basically at war with our governor here in Florida, and so they've got some issues going on. But they were being buoyed by the live stream. Disney Plus had been doing pretty well, but all the data here, and again, this is my backyard, has been attendance is way down at Disney. In fact, you don't need the express passes. The waits are only 15 to 20 minutes. And if you've ever been to Disney, that's unheard of. It was more like an hour and a half to 2 hour waits if you didn't have the express passes. But everybody's going to Universal now, going to the new Harry Potter exhibit. The attendance at the Disney parks is way down, no doubt about that. So not performing well, and then they're involved in all that political stuff that's going on, and so they're struggling right now. And with the Hollywood strike, the writers and now the actors all going on strike, where's the content going to come from for Disney Plus? So it's a double whammy on Disney. I actually see this as a potential short here. The issue is it probably will find a little support down here around 85 from that low back in December. But if it were to break that, then your favorite expression, Scott, Katie bar the door, comes up. Then it could be really ugly for Disney if that were to happen. And you have to wonder, with attendance down and now the strike, it's a tough. Bob Iger came back at a really difficult time. If they could somehow get back above 90, then you could have a speculative trade here. But right now, I think we're more likely to see a test down to 85, and then we have to see if that can hold. So Disney's in a mess. So that's actually really glad you asked about that, because I heard all that chatter, and being so familiar with the story, living in Central Florida my whole life, I'm pretty familiar with what's going on here.
Well, that wraps up the half-hour show. Rob, thank you so much for your time today. Everyone, thank you so much for your questions. It's so helpful. I learn something every time I get the questions. I'm looking forward to doing it again next Friday. Rob, you enjoy National French Friday and National Mac and Cheese Day.
I was waiting for it. I knew you were going to come up with something. And the funny thing is, I had actually seen it was National French Friday, and I was going to bring it up. I totally forgot. So you got me again. So you're great about coming up with those things. But thanks. Good to see you again. Thanks for everybody that watched, spend a little of their Friday afternoon with us. It's been a heck of a week. So next week promises to be pretty interesting, and we'll see you here again same time next week. Have a great weekend, everybody.